Bitcoin, it briefly dipped below 90K, but it's back around $93,000. It's down about 10% in just 1 week. It's now negative for the year. Is this the bottom? Or are we headed lower from here? Joining me now is Cosmo Jiang, general partner at Pantera Capital. Cosmo, it's great to have you on.
Hi, Morgan. Thanks for having me.
Is this crypto winter coming early here?
Look, we just had a long 6-month rally, so some consolidation, I think, is very reasonable. Crypto tends to have these characteristics of risk-on assets, so it's also pulling back on macro action. And you guys have just talked about the large macro concerns like the AI capex fear causing the equity pullback, the fears around credit, the fears around the Fed's plan for rate cuts. And because Bitcoin is a higher growth asset, it also has higher downsides. I think to put it in context, Bitcoin has seen multiple 30% drawdowns during any typical uptrend because of that higher volatility. I'd say it's too early to call whether we're entering a sustained downtrend, but certainly this would be relatively typical for any drawdown.
At what point, as you do see these drawdowns in Bitcoin and other cryptocurrencies right now, at what point does it become a broader issue? You just mentioned macro that ricochets across other margins due to margin calls and the like.
So what we already saw is that a lot of the leverage has been taken out of the Bitcoin ecosystem recently. Earlier in October, crypto had its own idiosyncratic issue with a large deleveraging event. And so we've already seen a lot of that pain has already happened with the deleveraging. Now, naturally, as things go down, there is a little bit of negative reflexivity and certainly market sentiment that drives it. But we feel pretty strongly that, especially now that 16% of Bitcoin is held by institutions, which is up from basically 0% last cycle, we think Bitcoin is going to be increasingly less sensitive to and less likely to have volatility. And over time, that a 30% drawdown is actually it will become larger and larger. Will feel larger and larger over time. And we'll see smaller and smaller drawdowns.
Yeah, to your point, just the fact that Harvard University's endowment fund is now holding Bitcoin exchange-traded ETFs kind of says it all, doesn't it, in terms of institutional flows into the asset space. How are you viewing this right now? Is this a viewing opportunity? Do you sit on your hands? I guess, what are you doing at your fund?
Well, look, from our perspective, we're long-term investors and true believers in digital assets ecosystem. To put it in perspective, our Bitcoin fund, which was the first institutional fund investing in blockchain assets, launched in 2013. And since then, it's grown at nearly an 80% CAGR for the life of the fund. So that's pretty incredible. You don't really see a lot of assets that CAGR at 80% for over a decade. During that time, we as a firm, we've lived through 4 bull cycles, 3 bear cycles. If we're entering a bear market now, it'd be our 4th. But it does feel like, if this is an asset that can continue to compound at a similar rate that it's done historically, and we're getting a 30% pullback here, we do think it's a really interesting opportunity to start, allocating in slowly.